Hey, what's up YouTube? My name is Justin Nguyen, and today I'm going to be sharing 3 of the top stocks that you can buy for the month of March. Just a reminder, everything I share in this video is not financial advice. This is just my opinion. Make sure to do your own due diligence when purchasing a company. I do have positions in all 3 of these companies I'm going to share with you today. Before we begin, if you've never used Webull before, make sure to use my link down in the description to get some free stocks when you deposit $100 with them. Alright, so the stock market has kind of been a little crazy this past week with so many different things going on. For starters, we've been seeing a huge sell-off within the growth sector of the stock market. Take a look at some of these. Tesla is down 23%, NIO's down 27%, Workhorse took a beating and it was down 63% this week. CCIV was down 52%, Beyond Meat is down 25%, and ARK was down 17%. As you can see, lots of YouTubers were making videos talking about this stock market crash. What's interesting though is if you look at the S&P 500, it's almost like nothing happened. As you can see here, the S&P is only down 3%. So it's barely gone down in comparison to many of the growth stocks. I mentioned in my last video that the current valuations of the market are extremely rich right now, and we were due for a healthy pullback. And on top of the craziness of this market sell-off that's been happening in the tech sector, we have stocks like Gamestop resurrecting. Just when we thought the GameStop shenanigans was over, this past week, it rose 266%. When I look at the overall market right now, it's kind of schizophrenic. In one part of the market, we're having a massive sell-off within the growth and tech sector, and then with the S&P 500, it's as if nothing is even happening, and then lots of people are piling their money back into the meme stocks. So with the 3 stocks that I'm going to be sharing, they're going to be long-term growth plays, because we've been seeing that sector of the market sell off, which has provided some good buying opportunities. The first stock on my list is Unity Technologies, ticker symbol U. I won't cover this stock in great detail because I already made a previous video in which I give my full bull thesis as to why I'm bullish on this company. If you haven't watched it yet, you can go check it out. This past week, I did add to this position. I currently own 25 shares with a cost basis of $115.87. Currently, Unity is trading at $107.63. And it's down a total of 37% from its all-time highs. If you're not familiar with Unity, this is a software that artists, designers, and developers use to create 2D, 3D, AR, and VR projects. One of the big reasons I like this company is that it's growing its revenues like crazy. In the last quarter, it reported that its revenues grew by 39%, and the company made this statement: "Our goal is to build a company that delivers revenue growth of approximately 30% over the long run." This company is the leading player when it comes to game development. Over 50% of games are built with their software, and 60 to 70% of all things augmented reality and virtual reality are built on the Unity platform. Both of these spaces are positioned to grow 10 to 40% over the next decade. The global video game market is expected to grow at a compound annual growth rate of 12.9% until the year 2027. The global augmented reality market is expected to grow at a compound annual growth rate of 43.8% until the year 2028. And the global virtual reality market is expected to grow at a compound annual growth rate of 21.6% into the year 2027. Currently, Unity's market cap is sitting at $29.44 billion. Because this company is the market share leader in these rapidly growing industries, I believe that the market cap can easily hit $60 billion over the next 5 to 10 years, which would mean a doubling in stock price. This company can have a lot of volatility in the short term, but for those who are patient and willing to hold this stock for the next 5 years, I think that they'll be really rewarded. So here's my buying strategy for this company right now. If this stock continues to show weakness within this tech sell-off and goes under $100, I'm going to continue to add to my position. Anything under $100 I consider a bargain as a long-term play. And make sure to watch my last video on this company where I give my full bull thesis as to why I believe this is going to be a beast of a stock in the future. The next stock that I have on my list is Palantir, ticker symbol PLTR. So Palantir actually gets its name from Lord of the Rings. In the movies, Palantir was an indestructible ball of crystal. You may be familiar with it when Saruman used it to see into different parts of Middle Earth. This company was founded by Peter Thiel in 2003. If you don't know who that is, he was a huge contributor to starting up PayPal alongside Elon Musk. So Palantir is a company that specializes in big data analytics. As of right now, we're entering into a new period into human history where it's a technological era, and with that comes a lot of data. Some have been saying data is the new gold. This company is positioned to grow over the next decade as it capitalizes within the data space. I currently own 125 shares of Palantir with a cost basis of $26.20. This stock is currently trading at $23.90, and it is down almost 39% from its all-time highs. This stock was already facing selling pressure because of the lockup period, and insiders were selling a lot of their shares. And when the tech sector began to sell off this past week, Palantir faced even more selling pressure, which drove the stock price down. So Palantir had two big factors that caused its stock price to sell off so dramatically. And with that, I believe it provides a great buying opportunity as another long-term growth play. So here's what Palantir does. They say that they make products for human-driven analysis of real-world data. They're focused on creating the world's best user experience for working with data, one that empowers people to ask and answer complex questions without requiring them to master querying languages, statistical modeling, or the command line. To achieve this, we build platforms for integrating, managing, and securing data, on top of which we layer applications for fully interactive, human-driven, machine-assisted analysis. They offer three different products as you can see here: Gotham, Foundry, and Apollo. Gotham helps integrate, manage, secure, and analyze all of enterprise data. Foundry helps amplify and extend the power of data integration. And Apollo powers software as a service in places none of that has ever gone before. This company is growing significantly and will continue to grow over the next decade. Here's some information that they shared in Q4 in 2020. They had 47% increase in revenue growth, 17% increase in adjusted operating margin. They had 21 deals signed in Q4 that were each worth $5 million or more, and 12 of them which were worth $10 million or more. When you look at the numbers of this company, they're growing very fast. In 2020, Palantir generated $1.093 billion in revenue. Palantir said it expects to earn $4 billion in revenue in 2025. That's crazy. Not many companies out there are expecting to 4x their revenues in just 4 years. I think it would be important to talk about why some investors don't like Palantir stock so that we can address those issues. A big thing that people don't like is that a majority of Palantir's revenue comes from the government. In 2020, Palantir made $610 million from government customers, and that contributed to 50% of their total revenue. Some investors are worried about Palantir's profitability because they are highly dependent upon government customers. Long-term investors have a different perspective when it comes to Palantir's future growth potential. It's one that is not dependent upon government customers. As you can see in this article here, Palantir's product Foundry is the one that has the untapped potential. Long-term investors are believing that Palantir's commercial business is really the future of this company. As of right now, Palantir is very dependent on these government customers to make money, but in the future, government customers are only going to be a small part of their revenue as it focuses on expansion within the commercial space. In 2020, Palantir generated a 107% increase in revenue growth from their US commercial customers. Just this past week, we saw Palantir partner with a $100 billion company, 3M, and they announced a multi-million-dollar expansion with them. I think as time goes on, we're gonna see Palantir's revenues grow as it continues to land big deals like this one. Check out what Palantir shared in their last investor presentation when it comes to their expansion outside of their government customers. This is only the beginning. Their customers include only 8 of the Fortune 100, 12 of the Global 100, and 24 of the Global 300 companies. Because Palantir works with big data, it's gonna continue to get more clientele, especially more than those 44 clients that it currently has. Needless to say, this company is only in its early stages, and it's barely scratched the surface when it comes to the potential deals that they can have within the commercial space. 3M is not the only company that Palantir is partnering with. They've made recent partnerships with IBM, with PG&E, and with the Fortune 50 healthcare company that has already generated $50 million in value. So with all that being said, this is a growth stock play. This isn't one of those stocks to get in on if you're expecting it to go to the moon next month. It needs time for the company to be able to mature and to grow. So here's my buying plan moving forward when it comes to Palantir. It's already down almost 40%, but that doesn't mean it can't continue to dip even lower. If this company continues to show weakness, I'm gonna continue to add to it. And if it goes under 20, I think that's an absolute bargain if you have a long-term perspective. If we're to look at the technical analysis of this company, there seems to be a good amount of resistance at around $22, but that doesn't mean it can't drop lower. The current RSI, which is the relative strength index for Palantir, is at 34, which is a good indicator that it's been oversold. Anytime a stock's relative strength index gets to around $30 or goes under it, it's typically always a good time to buy it. So if you get into this stock and have it as a long-term play, I think you'll do great over the next 5 years. All right, so the last stock on my list is Tattooed Chef, ticker symbol TTCF. Tattooed Chef is currently trading at $19.93. It sold off 12% this past week, and it's down almost 29% from its all-time highs. I do want to say that this is a riskier stock to buy, but I just couldn't pass up on it because of how fast this company is growing. And just like the other two stocks that I've mentioned, TTCF is a long-term growth stock play for me. I currently own 150 shares with a cost basis of $21.64. The vegan food industry has been growing over the past few years. Tattooed Chef is a plant-based food company. As you can see here, they plant, grow, manufacture, and handle the product from the fields to the consumer's hands. And in their recent earnings report, they share that they have their most profitable quarter. The president and CEO said this: "Our third quarter revenue marks the highest level in company history." When you compare the third quarter of Tattooed Chef in 2019 and 2020, there is a 65% increase. Last year they made $24.8 million. This year they made $41 million. That's insane growth. And when you look at the first 9 months of 2020 compared to the first 9 months of 2019, their revenue was $108.9 million, which is an increase of 87% compared to $58.1 million in the prior year period. And if you look at this chart that they shared at their investor presentation, you can see that back in 2010, they made $4.4 million in net sale, but this year in 2020, it went up to $148 million in net sales. And the growth on this chart is just insane. And I like this statement that their creative director makes. She says, "Our brand awareness is growing. Our distribution is expanding. Our innovation pipeline is robust, and we are confident that we can and will continue to build off the excellent foundation we have established and drive significant growth in the years to come." So one of the big reasons that I like Tattooed Chef is because of how fast it is growing, and I believe it's gonna continue to grow in the future. Another aspect that I like about Tattooed Chef is their balance sheet and how much money they actually have in cash. As of February 22nd, 2021, the company's total cash balance is approximately $200 million. And that's really good considering the market cap of this company is sitting at $1.4 billion. So it's not just the fact that this company has cash on hand that I like, but it's what they're choosing to do with their cash. As you can they're planning to use their $200 million of cash on hand to invest in strategic growth initiatives to accelerate growth and enhance long-term stockholder value. And so with that being said, this company cares a lot about their investors, and unfortunately, not all companies do. And so I really like that about Tattooed Chef. Even though this company has been growing so fast, so quick, they're not planning on slowing down. I'm gonna share with you 3 things that they're doing that is going to increase their growth over the next 5 years. One of their plans is that they have a massive opportunity to disrupt the $55 billion US frozen food category. They're specializing in frozen foods because the studies have shown that millennials and Gen Z are driving growth in the frozen food section due to convenience, frozen, fresh, and plant-based foods. In just 2 years, the number of consumers who say convenience had a significant impact on their food purchase grew from 49% to 57%. So a big part of Tattooed Chef is they're planning to infiltrate into the frozen food industry. One of the second catalysts for Tattooed Chef's future growth is that they're introducing so many new products. In 2020, they introduced 38 new SKUs that they had, and in 2021, they're introducing 62 new products. Something that I've been really liking about Tattooed Chef is not that this company is just introducing new products, but it's shown at the major retailers that they're selling at, like Costco, Sam's Club, and Walmart, is that their products are a hit and people are loving them. As you can see here, there is an increasing demand for the Tattooed Chef brand. And the last catalyst that I'll share that will contribute to their future growth is their marketing strategy. Up until this point, Tattooed Chef has made so much money without marketing. So in 2021, they're planning on doing their first marketing and advertising campaign. And with this detailed marketing plan, I believe that Tattooed Chef will become more of a household name and something that most people are familiar with, which will increase sales. So these are just 3 things that will contribute to Tattooed Chef's long-term growth. And there's actually a lot more things that are happening that make me really bullish on this company. So here's my buying strategy when it comes to Tattooed Chef. It's currently trading at $19.93. And in my opinion, anything under $20 is a steal. And if we're to look at the technicals behind it, the RSI is currently at 33. And remember, when a company's relative strength index gets to around 30, that's typically a great buying opportunity. So overall, with the recent sell-off in growth stocks, I believe that Tattooed Chef has been beaten down to some attractive valuations. So over the next few weeks, I'm gonna be watching this stock very closely to see when I can continue to add to my position if it continues to show weakness. And so there you have it. Those are the 3 companies that I believe are some of the top stocks that you can buy in March. So if I gave you any value today, just a reminder to hit that like button. It really helps the channel out. Well, thank you guys so much for watching. Now it's time for you to go make that money.